Well, the 7th Tokyo International Conference on African Development wrapped up in Yokohama, Japan last Friday, with participating nations and organizations committing themselves to the promotion of advocacy platforms to attain greater visibility for the African Continental Free Trade Agreement. Now, the Yokohama Declaration 2019, adopted at the end of the conference, said improved advocacy would enable the private sector and other stakeholders in Africa and Japan to enhance their participation in AFCTFA. Now, aside from the main deliberations by presidents, heads of state and government representatives, there are a number of engagements by countries and bilateral talks with the host nation and among themselves. President Muhammadu Buhari was among the heads of states that attended the summit, and it's not just the government officials. There were private sector representatives from Nigeria. The Director General, Lagos Chamber of Commerce and Industry, Mr. Muda Yusuf, was at that conference, and he joins us now. Good morning, Mr. Yusuf. Welcome back from Japan.
Thank you very much. Good morning to you.
All right, let me first get your take on the second quarter GDP numbers released this morning. Should we worry?
Of course, we should worry. First, there was a slight drop in the GDP numbers. I think the last quarter we had about 2% GDP growth. Now we are having 1.94 GDP growth. This also underscores the fact that we still have very serious challenges with the economy. When you relate this, for instance, to the population growth rate, and when you also look at the total basket of the GDP, from these numbers, we notice that 90%, slightly over 90% of the GDP is accounted for by the non-oil sector. And when you look at the revenue challenges that we are having, if you have less than 10% of our economy accounting for over 50% of revenue, and accounting for over close to 80% of our foreign exchange earnings. I mean, these are major structural issues that we should worry about. And this also speaks to the challenge of productivity in the non-oil sector. Because if we are talking about jobs, if we are talking about poverty alleviation and the rest of it, it is the non-oil sector that will drive it. But the numbers that we see does not give much comfort as far as the non-oil sector is concerned. You can see that I think we had much better contribution to the growth from the oil sector than the non-oil sector. So these are challenges that we need to face, particularly challenges of productivity in the non-oil sector of the economy.
All right, back to the discussions for today, and that's the Tokyo conference. What's your major takeaway from that international conference on African development? Hello, Mr. Muda Yusuf, if you can hear me. What's your major takeaway from the conference you went for in Japan? We seem to have lost audio there with Mr. Muda Yusuf, but I'm sure we'll get back to him as soon as we're able to fix that issue. Well, let's look at the GDP quarter numbers again. Of course, it grew by 1.94% year on year. That's in real terms in the second quarter of the year. And that is compared to the second quarter of 2018, which recorded a growth of 1.50%. And the data released by the National Bureau of Statistics shows that the growth seen in the second quarter 2019 is an increase of 0.44% points when compared to 2.10% recorded in the first quarter of 2019. However, the second quarter 2019 real growth rate indicates a decline of 0.16%. All right, we have Muda now. Yes, Mr. Yusuf, I was asking your major takeaway from the Tokyo International Conference on African Development.
Well, I think it was a very good forum for African countries to interact with the Japanese government, and for also African countries to interact among themselves. As you know, Japan is the third largest economy on the continent with a GDP of approximately 5 trillion US dollars. And given the challenges that many of the African countries are facing, especially in terms of financing, particularly from the point of view of their infrastructure, because infrastructure is one of the biggest challenges confronting the African continent. It has been estimated that for the continent, we have an infrastructure deficit annually of 108 billion US dollars. And for Nigeria, we have a deficit of 31 billion US dollars annually. So this speaks to the challenge that the African economies are facing. And that explains why we have many of the African countries, showing up at that conference. I think over 20 of them were there. So it's an opportunity for all of them to take advantage of whatever facilities that are there provided by the Japanese government, and also an opportunity to see how much investment can be attracted to their various countries. So I think it's a very good thing that it has happened, and it provides a good opportunity from both the business and economic point of view.
Now, just as you said, with the TCAD, it seems there is a scramble for Africa. We've seen similar forums such as Africa-China Forum. What is responsible for this trend?
Well, first, the global economy, there are quite a number of challenges arising first from the challenge of the trade war, increasing protectionism, and a lot of challenges about also the global growth. So every country is looking for opportunities beyond their traditional channels. And given the fact that the African growth opportunities and growth potentials in Africa is still much higher, than many other parts of the world. Averagely, growth rate in Africa has been put around 3.5 to 4%. And the prospects for growth is not there. The population is huge. So quite a number of these countries can see the potentials in Africa, even though, of course, we have our challenges here and there, but they can also see the opportunities. So that is why I think there is this apparent scramble for Africa. And I believe that, every serious African country should take advantage of that, to get as much as they can, and in a way that is consistent with their national interests and their national economic aspirations. So I think it's a good thing, it's a good development for Africa. The African countries only need to properly position themselves to be able to optimize the opportunities that this apparent scramble for Africa offers.
Okay. Now, President Muhammadu Buhari invited Japanese investors to invest in Nigeria. What are the prospects of this happening with all the challenges of our business environment?
Well, President Buhari, on that mission, of course, it was like a marketing mission. So it's natural that when you go on a marketing mission, you project as much as possible the positives of your product, of your economy. So that, I think, is what the president has done, and which is, for me, is the right thing to do. But, inviting investors to participate in an economy goes beyond just the rhetoric of just inviting them, and it goes beyond what the political leadership also says. An average investor, before they take decision, they do their due diligence. They check, they do a lot of risk assessment, they look at the environment, they look at what is happening on the ground, and so on. Given that, of course, they know that there are opportunities here, but they also need to manage the risk of investment. So we have a challenge to ensure that the risk of investing in this environment is much lower than what it is now. Because we don't seem to be addressing those aspects of risk to investment, especially when we are looking to attracting FDIs, foreign direct investment. Because foreign direct investment is a long-term investment. It has a much longer time horizon. And it requires a lot of confidence on the part of investors before they can deploy resources into such investment. So we need to continue to prevail on the government. And of course, this element also was reflected even in the speech by the Japanese Prime Minister about how we need to engage in terms of advocacy to ensure that we have the right kind of environment. So we need to create the environment that will give the confidence to these investors, given the fact that we are looking at long investments. We need to ensure that our policies are investment friendly. We need to ensure that our policies are consistent. We need to ensure that our institutions are investment friendly. And we need to ensure that there is more effective and robust communication between the investing community and the policymakers. All these things are very important so that we can have the right kind of environment, not just for foreign investors, even for domestic investors. Because most times, foreign investors take a cue from what is happening to the domestic investors. Actually, the best way to even market your economy is to showcase the success stories that you have in your economy. So we have a great deal of work to do to ensure that all the dimensions of our policy space, all the dimensions of our regulatory space are such that are attractive to investors. So this is what we need to do so that we can get value from all the trips and all the engagement that we are engaging internationally.
All right, so from your perspective, what sectors of the Nigerian economy can the Japanese investors make an impact? And is there any risk to the Nigerian economy in this kind of relationship?
Well, the Japanese economy, just as I said, is a very big economy. It's a 5 trillion naira economy, $5 trillion economy. And of course, they have very strong competencies and competitive advantage in the area of technology, for instance, ICT, automobile, machineries and equipment, and to some extent, even food processing, and also infrastructure. So in all of these areas, I think these are areas in which the Japanese investors should be looking at, which I also believe they are looking at. And the good thing is that we have that kind of market here in Nigeria. And given the fact that we are also transitioning to the African Continental Free Trade Area, it is very easy to position Nigeria as a hub for the African continent when it comes to all this investment. But just as I said, unless we get the environment right, unless we get our institutions and policies right, we may not be able to achieve this. So these are the sectors I believe the Japanese investors will be looking at. Concerning the risk, I don't think there is so much of risk because it's a question of the kind of strategy that we deploy in attracting investment. We need to have the right kind of investment policy framework to ensure that we have maximum value from this investment. We need to channel those investors to areas in which we can have much bigger impacts in terms of employment generation, local value addition, backward integration, and all of that. These are the key things, and also on infrastructure. So it is for us to shape the kind of investment that we have so that we minimize risk. We also should be focusing more on equity investment. We should focus less on borrowing because already we have quite a lot of challenges in terms of debt servicing. Debt servicing as a percentage of our revenue is increasing by the day. And apparently, it is very clear to us that the current debt profile is not sustainable. So we should be looking more at how we can create the environment for equity capital to come in. That will put less pressure on our own resources. It will create jobs, and it will benefit the economy much more. And there are quite a lot of areas in which we have financing gaps into which these investors can come.
All right. Thank you, Mr. Yusuf, for sharing your thoughts there. Thank you for your time. Muda Yusuf is the Director General, Lagos Chamber of Commerce and Industry.
Thank
Well,
you very much.
let's do a crossover now to London for a market opening call with my colleague there, Juliana Olanka. Good morning, Juliana.
Good morning, Jimmy.
Well, reports of a possible snap general election weighed on the pound yesterday. How has the currency market opened this morning as well as the stock market?
Well, the FTSE 100 surprisingly opened about 16 points higher this morning, and that's really because of just how bad the pound is. It's kind of hovering around that $1.19 level, and that's really because, of course, there may be a snap general election. Nobody, even those closest to Whitehall, know exactly what's going to be going on. Yesterday, the Prime Minister gave an impromptu address to the nation where he said he doesn't want a general election, but he will indeed be pushing for that dramatic exit from the EU with or without a deal. Today, there's going to be a major showdown in Parliament because this is the first time MPs will face off since they've come back from what seemed to be a very long summer recess. So, the Brexit fiasco keeps lingering on.
Well, in the face of this Brexit, are there companies on investors' radar for today?
Well, yeah, we're expecting the PMI numbers for construction. We had the UK PMI numbers for manufacturing yesterday, and that 47.4 reading was a 7-year low. It seems as if exports are really on the decline here as a lot of businesses take away their factories and put them onto the mainland. There are some economic analysts that are already saying that the UK is in a recession. There still is a month to go, but it'd be interesting to see just how bad things are in manufacturing. But of course, the service sector is the UK's biggest sector. That accounts for about 80% of GDP, and that's due later this week. But what happens today and this afternoon will give a key indicator to where we're heading.
Yeah. Well, while we'll keep a tab on that construction data, the government's next spending review will be unveiled on Wednesday. What is it all about?
Well, this spending review has actually been postponed several times, but yet the Chancellor of the Exchequer, Sajid Javid, will lay out his plans. And a lot of insiders and those close to him are saying that it's really going to be focused on trying to show that the UK is a major player, considering it's got a lot of domestic mishaps going on, as well as putting a lot of money into trying to improve their relationship with diplomats. They're also going to be focusing on defence. There are several engagements that are taking place in the UK over the next couple of years. We'll be hosting the G7 in 2021, as well as the Commonwealth Games in 2022. So a lot of money is going to be pumped into that. But we did hear from Boris Johnson yesterday where he said as well that they'll be investing in the NHS and with police. So, the opposition is saying they're looking at opinion polls and just ticking those boxes. But it'll be interesting to see if indeed he does do this spending review, because, of course, Wednesday is the day that people are saying Boris Johnson is likely to call that general election.
Right. Well, Juliana, I'm sure you'll have more update for us later in the day. Thank you. Well, let's go on another quick break now. And when we come back, we'll do an opening call to Nigeria's fixed income and the equities market. Just stay with us.